Today I'm going to explain why Bitcoin is the apex asset. We will use this equation to is the market cap of real estate, the market cap of gold, the market cap of equity, the cash and bond market cap plus the market cap of Bitcoin. Or we add up all of them, it will be the wealth of the world wealth. We will ignore crypto, commodities, even cars, etc. This we will bring up in a later video. Well, for my estimation, I think it's not very accurate, but it doesn't make any less difference to the explanation. The real estate market cap is around 400 trillion. The gold market cap about 10 trillion. The world equity market cap is about 80 trillion. And the cash and government bond is about 300 trillion asset. As for Bitcoin market cap at the current price of 16,600 is about 0.35 trillion. Let's look at 10 years later. What will happen to the price of all these different assets, assuming people are still holding their wealth in this ratio? That means 10 years later, people are still holding 400 trillion. Then that means the ratio of this real estate over market gold is still the same as initially. Well, we have over here the market cap of the real estate here, and the value of the real estate will actually drop by 22%. The reason being, we know that building actually lose at least 1% every year, and there's also property tax, maintenance, so let us give it 2%. So a depreciation of the value of the house or every year of 2% will be about 22% after compound at 10 years. As for gold, we know gold actually increase the quantity of 2% every year. So after 10 years, gold, there will be a 22% extra quantity of gold. As for equity, well, assuming that initially we have the real wealth and 10 years later the real wealth is still the same, well, we will say that the market cap, the real market cap of equity will be equal, the same, because we still have the same productive asset to produce the same value of wealth. Now, how about cash and bond? Well, if we look at it from the last 60 years, we can see the US money supply over here. It actually increased by around 5% at minimum. I would say conservatively about 5%. You can see this one, 1960, 5%, 7%, 8%. In fact, 2020 is 25, last 2021 is 12. For 2022 is the first time we have a negative growth. But if we look at all this data conservatively, we can say it's about 5%. Well, 5% you compound for 10 years, the number of the cash and bond, the quantity will actually increase by 60%. Now, how about Bitcoin? Well, we assume that initially there's 21 million Bitcoin, and since Bitcoin is a fixed quantity commodities, it will still have the same number of Bitcoin, 21 million here. So we do not have, the quantity is still the same, 1. Now, so let us look at how the price will actually, the price of the cash will actually changes. Well, we know that because if let's say the market cap of cash is still the same, about 400 trillion, but given that there's 60% more quantity of cash, so the price of cash in real term compared to 10 years ago must actually drop by 60%. How about real estate? Real estate, the same with real estate, it will have to drop by 22%. because of the depreciation, the taxes, the maintenance fee, etc. Now, let's look at equity. We'll KIV equity first, because this one we will need to explain using how people allocate asset to explain how the equity price will actually change. But instead, let's look at gold. Now, because gold actually increased the quantity by 22% after 10 years, we can say that the price of gold compared to 10 years ago will definitely have to drop by 22%. How about Bitcoin price? Well, if let's say the market cap of Bitcoin is still the same, 0.5335 trillion, and now it's still the same, well, in real term, because the quantity is still the same, there's still the same amount of Bitcoin, the price does not change. So we can see that Bitcoin is one of the perfect store of value, because if there's no change, increase or decrease in the market cap, in real term, the price of Bitcoin is still exactly the same, that it doesn't lose, or it does not lose its real value. Now, not only in finance, there's a no arbitrage rule, in where people will actually try move their asset to, or when the other asset move to another asset, they actually increase in price. So, well, in this case, because cash is losing 60% after 10 years compared to real estate, people will move more money to real estate, because real estate lose less amount, 22% compared to cash. Or another way of saying, the money printing will actually monetize real estate. And from our experience the last 50 years, real estate have been increasing. But is real estate a good store of value for this new money that goes in? I would say is not. The reason being, wherever real estate is being monetized, the property developer will actually build more houses, more property. The reason is simple. Assuming that they spend $1 to build a new property, but they can sell for $2 because of the higher valuation or the monetization of property, they will definitely build more property as long as they can make above normal profit. So what will happen is that as long as there's a above normal profit, more property will actually come online, and this new quantity of property will actually reduce the price of property to this almost the same as the cash, the valuation of cash. So because of that, property is definitely not real estate is definitely not a good store of value. Now, how about equity? Remember, equity is a security. A security means that there's an issuer. So the same thing, the fiduciary responsibility of a security issuer is to increase the shareholder value. So imagine that every $1 of share that they issue, they can get $2. They can sell for $2 due to the monetization of the equity market. So the same thing, this issuer will keep on issuing new quantity of share until you can't get any extra valuation. So equity is definitely also, as a security, is also a bad store of value. Now, how about gold? We know that gold has been one of the best store of value for the last 5,000 years for human civilization. But remember, because gold actually increased the quantity 2% every year. So even if you try to monetize gold, the gold price will have to drop by 22% due to the increased quantity. Okay, so Bitcoin is still the best store of value, because the quantity of Bitcoin does not change. And when you put 10 billion, when the market cap increased by 10 billion, the price of Bitcoin will actually let's say the market cap increased by 10 times, the price of Bitcoin will increase by 10 times. There's no dilution of the monetary energy. So Bitcoin will be the best store of value. But why is that I say that it is the best asset or the apex asset compared to all these assets? Is we look at it, if we look at the real estate market cap is 400 trillion, Bitcoin market cap is 0.35, all this. Just a 1 trillion that goes into Bitcoin will actually easily triple the price of Bitcoin. And I cannot make a prediction, but let's say just a 10 trillion that goes in 10 years time, the price of Bitcoin will easily go up by 20 times. So this is one part. But the next part is, will all these assets be monetized going forward? Historical, yes, it is. Let's look at the money supply growth over here. We can see that a very conservative measure will be 5% money supply increase every year. But how about the GDP growth every year? We look at the US GDP growth here. Okay, I'm not sure whether you can see that. Okay, you can see the US annual GDP growth over here from 1950 to now 2022. Well, it's about this line here, which is around 3%. So you can see that the GDP growth is about 3% nominally, but the money supply growth is actually 5%. So definitely from the historic data, all assets are being monetized by this money printing. But going forward, will the government print even more money? I would say it's a definite yes. The reason due to the demographic from US, Japan, Europe, China, UK, people are getting more and more people are getting older and retired, and the government will have to subsidize even more and pay more for the social medical care, and there will be less and less younger worker going into the economy, so the tax revenue will be lesser. The increasing budget deficit or the spending compared to the decreasing tax revenue, the difference will be much bigger, and the only way to make up the difference will be printing of money. So people will have to look, as more money is printed, people have to look for a good store of value, and the only good store of value will be Bitcoin, as I have explained earlier. And Bitcoin will definitely demonetize for the next 10 years, 20 years, real estate, equity, gold, and it will be the apex asset. Thank you. And now we have a Bitcoin bounty commercial. On 29 November 2022, someone hacked my PC and stole about 62 Bitcoin from my PC. It was during a Skype message. A PDF file was sent to me. I do not know the identity of the person that sent me the PDF file, but unknown to me, it is an MS-DOS masquerading as a PDF file. Once I click on it, it wiped off my Electrum Bitcoin wallet on my PC, and it sent the wallet to the hackers. 3 of my wallet containing about 62 Bitcoin was stolen. You can see the Electrum wallet here, and that the Bitcoin that was stolen. This is the one of the wallet with about 31 Bitcoin. This is the second wallet with about 15.75 Bitcoin, and this is the third wallet with about 15 Bitcoin. You can see here it was stolen on the 29th of November. 29th November. And here are the blockchain detail of the stolen Bitcoin with the address where the Bitcoin is sent to. For the first one with stolen 15 Bitcoin, this is the URL of the blockchain transaction, and it's stolen and sent to this Bitcoin address with the transaction hash ID here. The second one, 15.75 Bitcoin is stolen. This is the URL of the stolen transaction and sent to the Bitcoin address, this with the transaction hash ID of this. And another 31 Bitcoin, this is the URL of the blockchain transaction, stolen and sent to this address with the transaction hash ID of here. All this detail I will put in on the detail of the YouTube page. I know the chance of getting back this stolen Bitcoin are 0. I hope this will serve as a record so that in the future, maybe we can trace to the thief who actually steal the Bitcoin. This also serves as a Bitcoin bounty. If anyone is able to trace it and leads to the recovery of the Bitcoin, I would like to pay the person 15% of the recovered Bitcoin.